If you're tired of second-guessing every trade and still watching your account bleed, this video will show you what's really holding you back and how to fix it. You'll learn to trade with clarity, confidence, and consistency, even in tough markets. If you're ready to stop surviving and start growing, hit that subscribe button. You had the setup. Everything lined up. Price was tapping into a clean demand zone. Higher time frame bias? Check. Risk reward? Solid. Confirmation? Candle close. Market structure shift, even a little volume spike. You hit buy, risk managed, and then it faked, bled out, broke through structure like it was never there. You sat back, staring. Not just at the screen, but at your own confidence leaking out of you. You thought you were getting disciplined. You thought you were improving. But here you are again, not just in a drawdown, but questioning your whole process. That's when it hits, not just the market's punch, but the mental spiral. Maybe I'm not cut out for this. Maybe this strategy only works for other people. Maybe I'll just take a break and come back fresh. Let me stop you there, because I've been exactly where you are. And I'm telling you, the moment the market hits back, that's not failure. That's initiation. This is where most people fold, not because they're weak, but because they thought trading was a plan-following game. It's not. It's a pressure game. No matter how smart your strategy looks on TradingView, it only becomes powerful once you've pressure tested it and yourself under fire. That's what this video is about. Not how to avoid getting punched, but how to take the punch, stay conscious, and keep your edge without panicking, pivoting, or destroying weeks of progress in one desperate overtrade. Because here's the truth. No trading plan survives the market untouched. But a mentally tough trader, they adapt without abandoning themselves. If that sounds like the kind of professional you want to become, keep watching. Let me take you back to a day I almost quit. This was a few years ago, after I'd spent months journaling, refining, backtesting, reducing my screen time. I had my model. I was trading the NY session, high probability setups, small risk. 3 winning days in a row. Felt amazing. Then came Friday. Same process, same routine. But the market just wouldn't move right. Price would react in the zone, give an entry signal, then either range or stop me out. I took 3 losses before 10:30 a.m. Now, here's where the test began. Not on the chart, but in my head. Part of me wanted to walk away. Smart move. Another part wanted to make it back with a late NY scalp. Dangerous temptation. And the most dangerous thought? Maybe I need to tweak my plan, add another filter, avoid trading Fridays altogether. But here's the insight I want you to get. At that moment, nothing was wrong with the strategy. What was wrong was me. Not wrong as in broken. Wrong as in misaligned with reality. Because reality isn't just follow rules equals get reward. Reality is follow rules equals accept variance. Stay present through the cycle. Mental toughness is not being perfect. It's being stable when the system doesn't perform the way your emotions want it to. So I closed my platform. I reviewed the trades. Clean. No overtrades. Executed well. Market just didn't give it. That's a win. Not because I made money, but because I didn't lose myself. That day changed my trajectory, because that's when I learned the real skill that separates the consistent trader from the hopeful one. Emotional neutrality under fire. Most people confuse discipline with perfection. I'll be disciplined when I stop losing. But real discipline is only visible during losing. That's the test. And the ones who pass, they've made a mindset shift that most beginners avoid. They stop asking, did the trade work? And start asking, did I work the trade correctly? Let's break this down into something you can use. Here's a practical 3-step method I teach traders when their plan gets punched in the mouth. 1. Separate execution from outcome. When you journal your trades, don't just write profit or loss. Break it down. Did I follow the bias and structure? Did I manage risk properly? Did I hesitate or rush? Was the loss mechanical or emotional? This will shift your brain away from judging your performance based on outcome and into self-mastery mode. Because here's the reality. The outcome isn't always the trader's fault, but poor execution, that always is. Expect the punch. Train for the recovery. Every plan has blind spots. Every system has dry spells, smart money models included. So you need a protocol for handling losing streaks, just like athletes have for injury or fatigue. Mine is simple. 2 losses, pause and review. 3 losses, stop for the day. End of week review. Was the problem execution, context, or just market variance? This protects your capital and your psychology. More importantly, it makes your trading business feel structured, not like a casino run on gut feelings. And when the market does eventually pay you again, you've preserved both your edge and your confidence. 3. Build recovery reps. Here's a principle from elite athletes. You don't become mentally tough by succeeding. You become mentally tough by failing and recovering the right way, over and over. So after a loss, don't just move on. Train the recovery rep. What does that mean? It means breathing deep instead of spiraling, journaling instead of deleting your strategy, resetting instead of revenge trading, practicing patience even when your brain screams for action. The trader who can stay stable when the market's unstable, that's the one smart money can't manipulate. Let me give you a chart-based example of how this plays out. Imagine prices moving into a clean 4-hour demand zone. You're waiting for a bullish engulfing candle on the 15-minute. You get it? You enter. But instead of exploding upward, price consolidates, wicks, then takes out your stop. Most beginners would assume the zone is invalid, blame their confirmation trigger, try to catch a reversal on the other side. But here's what a mentally tough trader does. Marks the failed zone, observes how price reacts after, waits for structure to rebuild before re-engaging. Sometimes the very zone that failed gives birth to a new setup once liquidity is taken, but you'll only see it if you didn't lose your head. Mental toughness creates clarity. Clarity lets you re-enter without fear or force. That's the hidden power of being emotionally resilient. You get to participate in the best moves because you're still in the game while others are resetting or rage quitting. If you've ever blown an account because you kept reacting instead of resetting, or if you've ever sat out the winning trade because your last loss made you scared to pull the trigger, this is your new edge. Not a secret zone, not a better indicator, but the ability to take the punch and stay professional. The markets aren't looking for perfection. They're looking for liquidity. And if your emotions are unstable, your account becomes very liquid for someone else's gain. But if you learn to hold your mental ground, you become the player, not the prey. Here's what I want you to reflect on. What if your next losing streak wasn't a setback, but a setup? A chance to practice recovery, to study yourself under pressure, to refine your protocol, to deepen your edge, because now it's no longer emotional, but intentional. And that's the shift. That's when trading starts to feel like mastery. If this is resonating, it's a good sign. It means you're growing past the surface level stuff. You're ready to stop tweaking your system every week and start refining your mind every day. And if you're serious about that process, it starts with eliminating the noise. Find a broker that respects your execution, that gives you clean data, stable fills, and space to think. I've left a link in the description to the one I trust. Use them, or don't. But don't let randomness rule your growth. In the next part of this video, we'll talk about adaptability. Because discipline is what keeps you grounded, but adaptability is what keeps you profitable. You'll learn how to adjust your system without abandoning it, how to respond to changing volatility, and how to evolve while staying emotionally centered. It's time to stop trading like a hopeful beginner and start adapting like a professional. If you want us to break down how smart money actually moves and how to align your trades with it, drop a comment below. If enough of you are ready to trade with real insight, we'll build something to get you there. Now that you understand how to absorb the punch without losing your edge, let's talk about something equally crucial: adaptability. Because mental toughness without flexibility, that's just stubbornness in a nice suit. And I'll be honest with you, that used to be me. I clung to setups that used to work. I avoided adapting because I thought that meant abandoning discipline. And worst of all, I equated strategy consistency with market predictability. But the market doesn't owe you consistency. The market is a living, breathing ecosystem of liquidity, always evolving, always hunting, always deceiving. And the traders who make it long-term, they don't just stick to the plan, they evolve the plan without losing the principles behind it. Let me show you how to do that without falling into the trap of constant strategy hopping. Think about your strategy like a language. You might be fluent in a dialect of price action. smart money concepts, order blocks, liquidity grabs. But what happens when the market starts speaking in a different accent? Maybe volume thins. Maybe volatility spikes. Maybe New York opens with aggressive manipulation and the clean reaction zones don't hold anymore. That's when most beginners panic. They throw out the whole strategy. They start adding extra filters, new indicators, stacking confirmations until their edge gets buried under complexity. And just like that, they become rigid in their thinking, but chaotic in their execution. Adaptability isn't about making your system more complex. It's about making your mind more fluent in multiple market languages. Let me give you a concrete example. There was a stretch in 2023 where my bread and butter setup, the clean market structure shift after liquidity, was underperforming. Price would still take out liquidity, still shift, still create a zone. But instead of reacting cleanly, it would consolidate or even break right through. At first, I thought I was missing something. Maybe my entries were late, maybe I wasn't reading the timeframes correctly. But after studying weeks of data, I noticed something. It wasn't me. It was volatility behavior shifting. The market had started overextending its liquidity grabs before the real move. It wasn't invalidating my concept, it was just deepening the fake out. So I made a subtle adjustment. Instead of entering on the first shift, I'd wait for the second touch, often deeper into the zone, with a tighter stop and more refined risk profile. That one tweak, grounded in observation, not emotion, brought my win rate back in line. No strategy overhaul, no panic, just adaptation. And that's the real skill you need. Observation over reaction. Most beginners are reactors. They see something new and immediately try to counter it. Professionals, they log it, study it, test it. That's what keeps them profitable when the market changes tempo. Let's make this practical. Here's a 3-phase method for adapting like a pro without losing your core edge. Phase 1, audit without emotion. Set aside 1 hour at the end of your trading week. Don't just review winners and losers. Review market behavior versus your assumptions. Ask yourself, did the market move faster or slower than expected? Were zones holding cleanly? Or was there a lot of manipulation before the move? Were key sessions, like NY or London, behaving as usual? Or was there a shift in timing or aggression? This isn't about judging yourself. It's about diagnosing the environment. Because sometimes the market shifts in rhythm, and if you don't adjust your tempo, you'll always be late or early. Phase 2, test, don't tweak. Let's say you notice that your 15-minute confirmations are too reactive in current conditions. Instead of jumping to a new strategy, you test the same model on the 5-minute or 1-minute for more precise entries. You don't switch your core idea, you refine your execution layer. Or maybe your sessions are less predictable now. Instead of trading NY open aggressively, you test waiting until post-news liquidity sweeps. But here's the key. You do this in demo first, or paper journal, not live capital. Adaptation is surgical, not emotional. If you're making live changes every time you take a hit, you're not adapting, you're scrambling. Phase 3, preserve the core, flex the context. You might have heard this before in performance coaching. Principles are fixed. Tactics are flexible. The principle behind your strategy might be, price seeks liquidity before moving with intent. That principle doesn't change, but how it plays out, the specific zones, candles, confirmations, that evolves. So build your adaptability around your principle, not in place of it. Otherwise, you lose your edge and your identity, chasing every new behavior the market throws at you. Here's a way to check if you're on track. If your system has changed 3 times in 3 months, you're not adapting. You're avoiding discomfort. But if your principle has remained and you've made small refinements based on log data, you're growing like a pro. Let's go even deeper. Adaptability isn't just technical, it's psychological. You might not be failing because of strategy flaws. You might be failing because your mindset isn't fluid. Here are some mindset shifts that mentally tough traders make. 1, they stop seeking comfort in sameness. Comfort comes from clarity, not repetition. If the market's changing, your rules can't be set in stone. They need to be grounded in logic, but flexible in execution. 2, they don't confuse uncertainty with danger. Uncertainty is part of trading. Danger comes when you respond to uncertainty with fear instead of observation. 3, They see discomfort as data. If something feels off in your trading week, don't suppress it. Analyze it. Ask, what did I expect to happen? What actually happened? What does that gap reveal about my assumptions? This mindset creates anti-fragility, the ability to grow stronger from disorder. The trader who trains themselves to adapt without overreacting becomes unshakable. Here's one more personal story to drive this home. There was a period when I couldn't seem to hold winning trades. I'd enter well, get into profit, then price would pull back, not even hit my stop, and I'd exit early out of fear, only to watch it run afterward. At first, I thought I had exit timing issues, but after journaling dozens of trades, I realized something deeper. I wasn't reacting to the chart. I was reacting to my memory of past losses. My nervous system didn't trust the market anymore, even when the setup was clean. So I built a rule. If I entered with a valid confirmation and price hasn't invalidated structure, I hold until TP or SL. No manual intervention. That rule forced me to retrain my nervous system. At first, it was painful. But over time, it gave me something I hadn't felt in months: consistency. Because adaptability isn't just about new tools. It's about training your emotional responses to align with your principles, not your fears. If you're still here, it means you're serious about growth. And you're probably realizing that this game is far deeper than signals and strategies. The real transformation? It happens between the trades. In how you recover, in how you observe, in how you train your mind to bend without breaking. So here's your next step. Stop trying to find the perfect strategy. Instead, build a good strategy, then train yourself to execute it with calm, clarity, and curiosity. Refine how you think, refine how you review, refine how you adapt. And as that happens, you'll stop being the person who gets punched and folds. You'll become the trader who takes the hit and recalibrates mid-round. That's what the pros do. If this resonated, don't just let it sit in your head. Apply it. Start by protecting your mental space. Use a broker that gives you reliable execution, clean data, and doesn't flood your head with pop-ups and noise. I've linked one I trust in the description. Feel free to check it out. And if you know a trader who keeps spiraling every time their plan fails, send them this video. It might save their account and their confidence. Subscribe if you're ready for more grounded, no-fluff videos that dig into the parts of trading that actually change you. Because we're not just here to talk charts. We're here to build traders who don't flinch when the market throws a punch. And remember, the edge isn't in the setup. It's in how you respond when the setup breaks. Train that, and the market will respect you. If this gave you something real to work with, a shift in mindset, or a tool you can actually use, give it a like, share it with someone who needs it, and hit subscribe so you don't miss what's coming next.